Hey everybody, Smart Silver Stacker here. Hope you're doing well. Last week, the military of Niger deposed Western-backed President Mohamed Bazoum and announced the coup on national television. Protesters have been spotted waving Russian flags, the military insurgents have requested the assistance of the Wagner Group, and an alliance of Western African nations, that's the Economic Community of Western African States, or ECOWAS, is planning a possible military intervention backed by France. So it's beginning to look like this Western African nation may become the next proxy battlefield in this nascent World War III that we are watching unfold. But the real problem for you and me, and the global economy in general, is that this military coup in Niger is just another example of how the ongoing breakdown of globalization and geopolitical stability risks creating short supply and soaring prices for critical commodities. In this case, one commodity in particular. And I've partnered up with today's video sponsor, Traction Uranium, ticker symbol TRCTF, to tell you about it. More on them later. You see, Niger has something that the world really needs: uranium. In fact, Niger is the world's 7th largest producer of the metal, the critical fuel needed to operate nuclear reactors. And France happens to be Niger's former colonial ruler, and it is where they get a lot of their uranium from. Now, if you recall, there used to be some pipelines that carried all this cheap Russian gas to Western Europe, but of course, those were blown up, just another consequence of the rapidly degenerating global geopolitical environment. And with that gas source cut off, nuclear energy has become that much more important. Last year, France generated more than 60% of its electricity via nuclear power, and now the new military junta in Niger has threatened to cut off a major supply of France's nuclear fuel. This is so important to France that they are threatening to back military intervention in the region. And I believe this is just a foreshadowing of what is to come, as we see more and more conflict in the coming years over critical resources. Now, so far, the move up in the price of uranium following this coup has been relatively minor. But should the supply remain disrupted for a prolonged period, more moves up are likely on the way. Because with a commodity like uranium, when you see close to 5% of global supply become endangered, you don't see a 5% move up in the price. When a nation's electrical grid is on the line, they will bid up tight supplies very high to ensure that they have what they need. If we take a look at the 10-year chart of the price of uranium, we can see it's already been on quite a rip, up almost 400% from the lows of late 2016. But if we then zoom out and take a long-term view, we can also see that the uranium price still has quite a way to go to take out previous highs. And it seems as though we are entering into a period where we may face a convergence of factors which may cause the price to do just that. First, let's examine the threats to the global uranium supply, because while the coup in Niger does show us how quickly commodity supply chains can be threatened, it's really just the tip of the iceberg when it comes to potential disruptions. This table that ranks global uranium producers shows that only 15 countries produce virtually all of the world's uranium. And you might note that every single one of the BRICS nations, that's Brazil, Russia, India, China, and South Africa, are on the list. Russia notably ranks just above Niger in the number 6 spot, and look at how much production is concentrated in the top position. Kazakhstan, that's a former Soviet state and a member of the Shanghai Cooperation Organization, by the way, controls a massive portion of supply with more than 45% of total global production. And to put this situation into perspective and show you just how vulnerable the uranium supplies are here in the US, according to the Energy Information Administration, we import nearly half of our uranium fuel from Russia and Kazakhstan alone. And we are now living in the age of deglobalization, with economic warfare quickly becoming the norm. The West has collectively imposed massive sanctions on Russia. Russia has weaponized its fossil fuel exports, the Nord Stream pipelines have been purposely destroyed, we've cut off China from advanced semiconductor chips, and in return, they've cut off the supply of rare earths. You get the idea. This is a growing list. And if nuclear fuel gets drawn into the mix, global prices could skyrocket, and producers located in geopolitically safe jurisdictions like Canada will become very important indeed. And at this point, I will note that our sponsor today, Traction Uranium, ticker TRCTF, operates uranium and rare earth metal exploration properties in the Athabasca Basin in Canada, a location that is home to the richest uranium deposits on the planet. Now, let's talk about a second factor that will drive uranium prices over the coming decade, and that is a surge in demand. You might have noticed this summer, if you went outside, that the world is in the midst of a massive heat wave. Now, regardless of whether you attribute this to anthropogenic climate change or some other cause, it has triggered a renewed wave of calls for the decarbonization of our grids. And while governments and politicians love to tout technologies like solar and wind, it's becoming clear that the world simply cannot produce enough of those to make a significant dent in fossil fuel consumption. One limiting factor when it comes to solar panels that we've discussed before on this channel is the amount of silver that is needed to manufacture them. There was a recent study conducted at the University of New South Wales that concluded the results show that the current rate of reduction in silver consumption is not sufficient to avoid increasing silver demand from the photovoltaic industry, and that the transition to high-efficiency technologies, including TOPCon and SHJ, could greatly increase silver demand, posing price and supply risks. And the silver problem with solar is, of course, just one bottleneck when it comes to the implementation of these forms of quote-unquote clean energy. So what's the answer? Well, nuclear really is one of the greenest energies out there. It has a smaller carbon footprint than either solar or wind, and it actually can give fossil fuels quite a run for their money. One pellet of uranium fuel provides the same energy as 17,000 cubic feet of natural gas, 120 gallons of oil, or 1 ton of coal. And that is why the construction of nuclear reactors around the world is on the rise, with emerging markets like China and India taking the lead in expanding their nuclear power generation capacity. Even here in the US, there is a renewed interest in nuclear power. Just a few days ago, the first new US nuclear reactor in more than 7 years began operating in the state of Georgia. And with oil prices on the rise and top oil producers like Saudi Arabia and OPEC Plus limiting oil production, nuclear energy's appeal will continue to rise. One final factor driving higher uranium prices is one that we've discussed extensively on this channel in the past, and that is inflation. The debasement of the dollar will, in my view, drive commodities higher across the board in the years to come, and uranium is no exception. And there are, of course, many factors contributing to rising dollar inflation, but a critical one to examine at this point in time is war, one of the most inflationary events an economy can experience. And that brings us back to the story that we began today's video with, this burgeoning conflict we have in West Africa and Niger. When you look at this, it's hard not to draw a historical analogy to the Vietnam and Indochina conflicts of the 20th century. You know what they say, history doesn't repeat, but it does often rhyme. And right now, we have a former French colonial possession becoming a proxy battleground for the West, pitted against our geopolitical opponents Russia and China. And if that doesn't at least rhyme with the Vietnam conflict, I don't know what does. And of course, that conflict, the Vietnam War, ultimately it was a significant contributing inflationary factor that resulted in the end of the dollar's convertibility into gold back in 1971 under Richard Nixon. And while the US is not directly involved in a significant way in this Africa conflict yet, it does appear that this may just be another offshoot and proxy battlefield of the conflict in Eastern Europe, into which the US has already poured billions upon billions of printed fiat dollars. Now, let's examine a play to take advantage of the coming inflationary bull market in commodity and uranium prices. Today's video sponsor, Traction Uranium, ticker TRCTF. Traction Uranium operates uranium exploration properties in Saskatchewan's Athabasca Basin, home to the richest uranium deposits in the world, with purities about 20 times higher than the international average. The team at Traction Uranium has significant experience working in this region. Their technical advisor, Bowen Tan, was instrumental in the 1975 discovery of the massive Key Lake uranium deposit. As the chief geologist, he was in charge of the delineation drilling of the deposit with reserves of 200 million pounds. Traction Uranium's Key Lake South property is located about 5 kilometers away from the Key Lake Uranium Mill, where they processed all of that uranium. And this is the largest uranium production center in the world. So they have access to top-notch refining capacity already in place. And this property, Key Lake South, in addition to uranium, also has potential deposits of nickel, cobalt, and rare earth minerals. Nickel and cobalt are critical components for the construction of electric vehicle batteries and will be in high demand as the decarbonization push continues. And we talked briefly about rare earths earlier and how China has weaponized their near monopoly on the production of these minerals. As economic conflict with China heats up, geopolitically safe sources for these critical strategic minerals will become tremendously valuable. Now, Traction Uranium is an exploration company, and the research team in charge of the Key Lake South drilling program has discovered 2 new, highly radioactive zones. They found samples of black soil, and the analysis results returned high-grade uranium mineralization at 0.93%. Back in the 1970s, the Key Lake team also encountered radioactive black soil, which led to the discovery of the massive deposit. This is an early indication that Traction could potentially be on the verge of something big as well. So if you're looking for a different commodity play to round out your portfolio, and you want an asset that can benefit from the rise of deglobalization, geopolitical uncertainty, and the coming uranium bull market, make sure you check out Traction Uranium, ticker symbol TRCTF. And look, I am not a financial advisor. Do not go out and buy this stock just because you saw it here. Make sure you do your own due diligence. A good place to start is by visiting tractionuranium.com. I will put a link down in the description, so make sure you check it out. And I do want to say a big thanks to today's video sponsor and to all of you for watching. Stay safe and happy stacking, everyone. Smart Silver Stacker, out.